Keep away from people who try to belittle your ambitions. Small people always do that, but the really great make you feel that you too can become great. Mark Twain. My friends, during the holidays, you'll be talking to all sorts of people, family members, friends. Some of them may try to belittle your efforts to become a trader, an investor, learn how the stock market works. Do not pay attention to them. Focus like a laser beam on learning this type of technical analysis. Fundamental analysis is great. We talk about that all the time, but buying at the right price. That is a major, major key. And that is what you learn with charting with technical analysis. You guys who've been with us for months or years, you've seen over and over again how well it works. You need to practice, practice, practice until you get perfect. 10 to 15 minutes a day, that's all we ask. Let's jump into these charts. We see stocks are mixed, bonds are down, gold is up. Now, let's see what's going on as we dive into the S&P 500 first. As we look at this week, we can see that we have a red spinning top, almost a doji after 3 weeks. Actually, we can go back a little further. 1, 2, 3, 4, 5, 6 weeks of up movement. We had that weekly vertical crossover back on Friday, the 13th of November. That next week was a little iffy. The following week even was a little iffy. We moved the weekly vertical cross out of the way. You can see we still didn't rise above where we were all the way back on week 1 and week 3. It was week 4, 5, and 6 where things took off. Our jumping in point somewhere around the 159, 160 mark. And then, of course, we saw things peak on the week ending Friday, the 18th of December, the high being 372.46. This week is where things are devolving. Price percent oscillator, a little less than flat. Derivative oscillator still positive, a little less than flat also. And we have that red spinning top, almost a doji, as we said. So as we continue to move forward, look at the 2-day chart. We had that 2-day crossover. If you stayed in until then, the last on that was 368.02. So you would have done decent. Now, of course, it did peak later. There are reasons to have looked at that peak. And again, we talk about that at the end of today's video. You're going to get your profit and loss band training if you'll watch for that. We've posted it like the last 3 or 4 days. Please, this is the last chance to do it. Take that training. Understand what profit and loss bands are, how to set those, how to use those before you even enter into a trade. And again, we're talking practice trading. We're not a stock calling service. We're an education firm. Want you to practice with us. What do we see going on? Well, we see more signs of down movement. First day of the latest 2-day candle, solid red spinning top. And again, that's showing us down movement, price percent oscillator pulling away from the red signal line. Derivative oscillator's gone negative. It's the first day though. I'm not calling that candle yet. We look at the half-day chart. Some up movement in the morning and then peeling off some of that in the afternoon. It was up for the day. Nonetheless, price percent oscillator heading down. Derivative oscillator a little less than flat. So again, has the market topped? Don't know, but we are seeing some signs of a great deal of slowing after 6 weeks of movement in the upward direction. We violated that weekly trend line. Now, let's move from stocks, from the S&P, still staying in stocks, going to the NASDAQ 100. So far this week, we see that we've not reached a higher high. We did have that weekly vertical crossover, a weak, W-E-A-K, weekly vertical crossover. We see the derivative oscillator gaining upward momentum. We see that the price percent oscillator is just barely above the red signal line. And we have a green upward candle. We look at the 2-day chart. We see, again, a red spinning top open box, which is a slowdown in the up movement. It's not a solid red. We see that the price percent oscillator is positive, but heading down. Derivative oscillator losing momentum. We go to the half day. That has been in the negative for a while, pulling away from the red signal line, heading down. We look at the 2-day. We're still above the 2-day trend line, well above the weekly, but we do have a downtrend line on the smallest of all our charts, which means the least to us, and that is, of course, the half-day chart. So we'll continue to watch, see how this develops. Wasn't super excited about this past weekly vertical crossover, but I did encourage you to backtrack and practice that. That's the other training at the end of today's video on backtracking. I want you to have that. And for subscribers, we have a special video for you today, Mastering the Market with our weekly market worksheet. We explain to you how to fill out that weekly market worksheet. Those PDFs are available to you each and every day for free. That's where we are on stocks. We go to bonds now. Bonds are going into what appears to be another week of down movement, the fourth. We see the price percent oscillator negative, less than flat, so it's still heading down. Derivative oscillator losing downward momentum, but still negative. Price is below that weekly trend line. We go from the weekly to the 2-day. What do we see there? First day of the latest 2-day candle, long wick on the bottom, still a red candle, a red spinning top. We look at the price percent oscillator and the red signal line fairly they're exactly the same. If you look over to the left-hand side of the page, under that first horizontal line, you will see PPO and exponential average 8 shows you that indeed they are the same. So we'll call that a lamination, but the derivative oscillator gaining downward momentum. First day of the latest 2-day candle. Let's go to the half day. We see strong down movement in the morning, tempered in the afternoon. And again, for the day, we are down 0.69%. So what's really going on with bonds? Well, we can see that the market has been trying to move down. It has been in a negative position for many, many weeks. And we look at that 2-day, and it just won't separate. So it won't give us a clear signal. Now, I do want you to pay attention because you might have a jumping in point near the close of the market tomorrow for a 2-day recross. The question is it going to be a good one? Have you been watching your 2-day recrosses for their accuracy? Have you gone and backtracked those? So is there a good reason for jumping in that? That is a question for you to study, think about, answer, and potentially practice trade this and see what you learn on your trade worksheet. That trade worksheet's also available for you. That is where we are when it comes to bonds. Going to go to our last chart for the day. That is gold. It is the biggest gainer for the day, 0.66% up, going into the third week of up movement on gold. Notice, though, we haven't reached a higher high this week. Gold is flat on the price percent oscillator, negative and flat. Derivative oscillator losing downward momentum. Go to that 2-day chart. The first day of this latest 2-day candle is again quite a slowdown in the up movement. We saw that already happening once it reached a peak back on the 17th. That represented Wednesday the 16th of December and Thursday the 17th. Then we saw the Friday-Monday candle not reaching a higher high. The body of the candle went higher, but we didn't reach a higher high during that time period. And here we've seen another significant weakening. The candle went from green open box to red open box, which again means a slowdown in the up movement with all the wick on top and bottom. Shows us price movement within that area, but again, indecision. Whenever you see wicks on the top and bottom, think of it as a spinning top, not the most stable thing in the world, okay? Price percent oscillator weakening, still heading up. Derivative oscillator heading up. So when we look at that 2-day, we can see prices still above, but again, weak. We'll see how that candle finishes up. Tomorrow, of course, well, somebody may be listening to this in the morning. We're recording this for Christmas Eve. The market does close early at 1 on Christmas Eve, so we'll just have the morning movement for us to look at. So again, we'll pay attention to that one, I guess, a few minutes in the afternoon. It will give us 2 candles nonetheless, so we'll evaluate that tomorrow. We, of course, since the markets are closed in the States on Friday, we will be recording that weekly review. So it'll be basically the weekend review that we typically do for you. That's where we are on the 2-day. What do we see on the half day? We see indecision, some up movement in the morning, followed by more up movement in the afternoon. Not enough to cross over Derivative oscillator still gaining downward momentum. That is still devolving because of the acceleration in the down movement up through the afternoon on Tuesday. The movement up on Wednesday was just not enough movement to cross things back over. You still had that momentum. Remember, it is an oscillator. So derivative oscillator gaining downward momentum. Price percent oscillators pulling away from the red signal line. So we'll see how things go. Like many of you, I am ready for this 2-day to pull the weekly over going up. But again, not enough momentum yet. So we'll continue to wait, watch and see. I'm ready to jump into up movement in gold. Maybe that'll be coming in the future. That's where we are, folks, as we end the day. Again, hope you are looking forward to a wonderful Christmas and holiday season. We'll continue to be here for you as the markets are open. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.